Your goal is to make money. That's what you do when you're trading. My goal is to help you make money as much as I can, whatever I can. Today, I made a video about candlestick patterns to benefit you when you're charting your stocks and your graphs and everything. So please enjoy the video, sit back and get your notebook, whatever you want to do. Just enjoy the video, like and subscribe, and thank you guys again. So let's get right through it. So first we're going to go through what are candlestick patterns and what are candlesticks to be exact. So candlesticks are patterns that help traders predict price movements. Each candlestick represents a time period. So right here we have 1 minute, and then below this we have another 1 minute. Each candlestick has a wick. Let me see if I can highlight this instead. Each candle has a wick down here. So this little part, this little part. So same thing with the green candles. And then usually the wick on the very top means that it's the highest price, and then the wick on the very bottom is the lowest price. And then if you see this little block right here, that's the body. It's open and close price. So if we look at a red candlestick patterns or a red candlestick, it shows that the candlestick is opening high but closing low. Green is the opposite, so opening low, closing high, so it's profiting within that frame. Please take a minute to pause the video and look at this if you need to, or come back to it later on, just quickly review it, because candlesticks are very important to get a grasp over, in my own opinion. It can signal bullish uptrends or bearish downtrends. Next, we're going to go over how they work. The body shows where the price is open and closed. The wicks or shadows, we already went through that, show the highest or lowest price during that time frame. The green candle, price went up. Red candles, price went down. Candles from patterns that help predict future moves. And I want to say this real quick. No one knows how the market is going to go unless you're in insider trading, blah, blah, blah. But no one knows exactly. So even looking at a pattern and seeing a pattern happening, it's still the stock market, and it still revolves around news, human emotion. So it's more than just technical analysis, but this can help you just get an advantage when trading. And that's all you really need, to be honest. So first, let's go through 1 through 9 of the candlestick patterns. There's a ton more, but I'm just going to create this video first. First up, we have the hammer. And my thing's not dropping. We have the hammer. Okay, it's a bullish reversal. It implies that it's a shift in momentum. The price drops when there's buying pressure, signaling the potential start of a trend reversal. So I did a little graph for you guys. This right here, I wish I can take that a little smaller. The green right here is the hammer. I mean, you can kind of see it, the handle and the hammer part. And then I marked on the graph where exactly you want to stop loss and risk reward when you enter a trade. Just going off of this, again, please don't ever just go off of this. You will end up losing money. I'm just telling you that now. Unless you don't, then hit the hooray. But at the very end of, so this part right here, the part I'm marking right now, that is your stop loss. That is if the price keeps going down and passes this blue line, it's red underneath. That's where you want to take out your money. Stop loss means you pay a loss at that stopping point. That's the way I think of it. That's the way you can think of it, or somewhere else. But usually you enter right around this point on this candle. Right around this point on this candle, you see that there's a hammer right here and that it was going downward. So if it's going down and you see a little hammer action going on, then there's a possibility for a bullish reversal. Next up, we have inverted hammer. And then this is a bullish reversal as well. So it's just the hammer that's flipped upside down, so the handle is on the upside. Same way, stop loss is just very smaller, or much smaller than the other one. Small body, close and open. Okay. Long upper wick. Stop loss placed below the low of the inverted hammer, so right here. So that's your stop loss. So if the price keeps going down, you should be out of your position at this point. If you're not, please stop. Entry point above the body of the inverted hammer. So right here. That's where you should be entering. And then taking profits 2 to 1. So 1, 2, so anywhere in this region. I know my drawings ain't the best, but hopefully it will just give you a better idea. I'm just gonna leave all the, you can read this if you want, you really don't have to. It's there if you want it. Next up, our third, we have the 3-line strike, bearish continuation. Okay, so what implies, despite the 3 bearish candles, so 1 bear, 2 bear, 3 bear, 3 bearish candles, Large green candle signals the uptrend is not over and might, because it's not 100% guarantee, continue. The strength of the move, a larger green candle following 3 red candles, increases the likelihood of the trend resuming upwards. So we see a big downward movement, and then all of a sudden we have this happening, something shooting straight upward. From that, we can see that they want to go up. The market wants to go back up. However, you keep seeing a bearish move again. So the place where you want to enter, a little hard, but at the very bottom of the wick of the green candle. And then your stop loss is above. You could also enter like right here, like in this candle, but it's hard to predict all these things. So next one we have 3 black rows. Okay. This is a bearish reversal. What implies 3 bearish candles indicate that the uptrend is ending. Okay, so we have an uptrend. And a downtrend is likely going to start and taking over. So the strength of the move, the longer and more consistent the red candle, the stronger the reversal. So a bigger red candle or a bigger volume, possibly for a bigger reversal. Stop loss above the high of the 3rd red candle. So this is your stop loss. The reason for this protects against breakout in the opposite. So if it goes like this, so right now it's going up and then down, and then it's supposed to continue going down. However, if it goes this way, kind of psychs you out in a type of sense, a false breakout, then that's where your stop loss is supposed to hit. And that's the reason for doing that. Reward 2 to 1 for a larger price decline. So if you do options, you would do a put option. 5 out of 9 patterns. We were talking about the evening star now. Trend reversal. Okay, so this is a bearish reversal. You get out the pen. Bearish reversal. What implies the pattern signals that buyers have lost control and sellers may be taking over. So the green candles are all the buyers. I don't know why I drew it like that, but those are all the buyers. And when you see this happening, so an uptrend, you see this little candlestick eye. It's called the evening star. And what it means is that the market is going to go down. Not a guarantee, but there's a possibility. So if all your signals and indicators say that market's going to go down, so like you're looking at MACD or RSI or Bollinger Bands or whatever you use, and you see this guy here and all your indicators say that it's going to go down, that might be a good entry point to do. The place you would enter is right at the bottom body of your second or your first red candle after the star. Your stop loss, where to place it, above the high of the middle candle, the small body one. Okay, so right here. So therefore, if it keeps going down, hip hip hooray, but if it goes back up, so your stop loss hits. You take the loss and you move on. Risk and reward should be 2 to 1. It just depends on how you wanna trade. For the 6 out of 9 patterns, we have a bullish engulfing. So a shift from selling to buying, indicating that market may reverse upward. Okay, strength of the move. A larger green candle after a small red one indicates strong buying momentum. Okay, so we're going downward. That's what's happening. And let's say we don't see the green candles right now. All we see is this small bodied candle. And then after that 1 minute, 5 minute, 10 minute, 15 minute time frame, whatever time frame you want to play your strategy on, we see this guy right here, this candle. It engulfs this tiny candle. So the entire length of this candle is engulfing the smaller red candle. And what that indicates is that a bullish reversal is going to happen. Not 100% guarantee, but I'm going to keep saying this. It's not 100% guarantee, but please just watch out for these patterns because they could help you. 2 candles, a small red candle followed by a larger green candle fully engulfs the red one. Entry above the green candle's body. So right here, this is your entry price. Your stop loss below the low of the red candle. Do it right here. So you see that happening, and you think it's going to go up. Okay. Next one, we have the morning star. So very similar to the evening star. However, it's going downward. It's going downward, and then it's going to go back upward. Basically what it is the same thing. So you have a little candle right here pulling up. It's kind of like a V shape. That's not a V. This is a V. And right here you have the candle. 3 candles, a large red candle, a small bodied candle, and a large green candle. Entry above the green candle's body. So you can have your entry right here or anywhere along this green candle. But just make sure you notice that there's a morning star occurring. So an uptrend might happen in the market. The stop loss, the small body candle's low. So this candle right here, at the very low, the wick, that is your stop loss. So if you do option, you do a call, and you think it's going to go up. However, it ends up going down, do purple, so it goes like this, but then just your stop loss is supposed to hit right at this spot in order for you to not lose even more money. Okay, second to last one are 3 white soldiers, bullish continuation. So 3 white soldiers, what implies the pattern shows that buyers are in control and the market is likely to continue moving upward. Strength of the move, the longer the green candle is, the stronger the continuation uptrend. 3 long green candles in a row. 1, 2, 3. Entry above the 3rd green candle's body. So your entry is right here. Your stop loss below the 3rd green candle's low. The low right here. So bullish, you think it's going to go up. That's basically what it is. You see 1, 2, and 3 candles happening, and you say, hey, that's going to go up. Our next one, last one, bearish engulfing. Same thing as the bullish engulfing. This is just saying it's going to go down. So all these candlestick patterns have kind of the bullish version of it and then the bearish version. This one's just the bearish engulfing and just means it's going to go downward. So what it implies, a shift from buying to selling, indicating the market may turn downside. Strength of the move, the larger red candle after small green one indicates a stronger bearish reversal. So this entire, even just the body, it's engulfing the smaller green candle right here. It's engulfing it, and it shows that there's more volume on the selling side. So there, it sort of means that there's going to be a downtrend happening very soon. Everyone in the market's selling, not everyone, but that's why it's going to start doing a bearish reversal. Your entry below the red candle's body, so right here. Your stop loss above the high of the green, so right here, doing candle wick. So if it continues to go down, make money. If it goes down, then shoots back up right here, you lose money. Okay, so that's the 9 out of 9 patterns. How to use candlestick patterns, very, very important. So first, look for strong signals. Candlestick patterns work best for big price movements, not small volumes happening in small stock symbols. So please be aware of that. So first, look for strong signals. Second, wait for confirmation. Don't trade based on just one candle, like the morning star or evening star. You see that one individual candle. Look for the next candle to confirm the pattern. Maybe not even the next candle, but the following candle. Maybe don't even trade it when practicing. Just see it happening and know what you're doing. And if you see it, that's when you wait for the confirmation to happen. Check trading volume. Higher volume during the pattern formation increases the reliability of the reversal, the continuation, whatever is going to happen will happen. It just increases your risk to reward. Higher volume, I don't want to say higher profit, but higher volume secured profit, if one way to put it. Combined with other tools, like indicators, like moving averages, RSI, or support resistant levels for better clarity. So don't just use candlestick patterns to do your trading. You will lose money. I just cannot state that enough. Please don't just use candlestick patterns. And practice. Test the patterns with a demo account before risking real money. Use paper trading. Use Thinkorswim. Thinkorswim has an amazing way of seeing past historical data and playing the market previous time during the real time of that day. So 2 days ago, you can play the market how it went, and you can see if you made money or lose money. You just have to practice. So let's go over it. I'm gonna use a different color. Okay, look for strong signals. First off, look for strong signals. See what you see, know what you see. Okay, 2, right here. Wait for confirmation. Don't just play off that one candle. Play off the 2 or 3rd candle. Play off the other indicators with the candle. Just please don't rush into your trades. You will lose money again. A lot of ways to lose money, not a lot of ways to make money. Don't be stupid with your trading. Check for trading volume. Number 3. If the trading volume's not there, don't trade. Simple as that. Your candlestick patterns will not go through with it. Your candlestick patterns will end up not being true half the time if the volume is not there. It's just how it is. You live from it and learn from it. Number 4, combine with other indicators. Okay, use RSI. Use MACD. Use Bollinger Bands. Use support resistant levels. Make your own support and resistant levels. Do not just trade candlestick patterns by itself. Please don't. my main goal for you guys is to make money. If you do that, you will lose money. So please don't do that. And finally, number five. Number five. Okay, whatever. Number five is practice with a demo account. There you go. Practice with a demo account. Practice with paper trading. Just get good at it. Just the more you practice, the more of a better trader you will get. I've read that you have to spend like 10,000 hours in order to be an expert on something. So just take the time, sit down, put music on, just look at a chart, understand the chart, what's happening, and you will get better by doing that. If you do a practice account, it is going to be different when you trade with a real account or when you actually trade with cash, because it's more with emotion and everything with it. It's a very psychological way of thinking when trading, and you gotta put all that to the side and don't trade with your emotions. Okay, so here I put a candlestick cheat sheet for you guys. If you wanna take a screenshot, print it out, do anything you want with it, share it to your friends, go for it. I made it for you guys, completely free. Took a while, so please, 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 do whatever you want with it. Best way to put it. And that's all really. I hope this video didn't take too long, but it is what it is. Thank you guys so much for watching. Please take a moment and look at our Discord link below. Need as many people as in that group as possible, because we have an insane amount of plans for that group in order for you guys to make money. Here are just some of the screenshots that we've made for you guys, and we have a lot of investors helping you guys with your journey of trading. So ARCAD, by investors for investors. You guys. Thank you so much for watching again. Please like, subscribe, do whatever you want. But that helps me an insane amount. And thank you again for watching. Have a great rest of your day.